Let's review a file that we recently closed for an investor using DSCR, right? No income check loan, no tax returns. And let's go over that file. The property value was $905,000. Client put down 25% down payment, $226,000. We do not care about his monthly liability because this is a DSCR loan. It was only one borrower on the file. The credit scores was 785, which was really solid. Household income, we do not care again because this is a DSCR loan and we don't care what type of employment he has. Property taxes were definitely on the higher end, nearly $15,000, and home insurance $23.53 here. Okay, the loan that this person chose is called DSCR No Income Check. You do need 720 credit scores. He had a lot higher. He had to pay down 20%. He paid 25. The closing cost is going to be on the higher end. So let's go through that, right? So your loan amount was 678. The interest rate that he got was 6.99 for this. Principal and interest was $4,551, but his escrow, right? This holds your property taxes and your home insurance. When you put that together, his payment was $59.40. So DSCR loans, they want your rental income to cover this payment here. But when we look at your 1007, this is your appraisal report, and on the appraisal report, it says that this property will bring in around $5,500 in rental income, which is lower. The reason this lender allowed them to go with this loan, one is that the ratio was 0.93%, which is close to 100, and their credit scores were top notch. Okay, his closing cost was definitely $42,000, definitely on the higher end. Why? Because Section A. Typically, when you show your income, you don't pay much in Section A, or you shouldn't, right? This is a borrower paid comp because this was a non-QM loan. So Section A has nearly $13,000 in cost there. In Section B here, these are the services that he did not shop for: appraisal report and other things in here, around $2,000. Okay, the title company charged $3,200 for the title search, and the government fees were nearly $7,000 for him. Okay, every county has different rates there. Prepays, these are the services that he already paid for, including his home insurance, nearly $10,000, including estimated school taxes and your regular property taxes and your prepaid interest. Okay, every file will have different number in Section F here. Escrow account, the same escrow account that we're telling them that is going to pay your property taxes and your home insurance. We're starting off with around $2,800 there. Okay, you do have your title insurance, which is optional, but every one of them gets this. This for the owner side, $4,000 there. Okay, so his final closing cost was $42,000. But if this was a QM loan where he showed the income, it would have been around $30,000. So DSCR loans are great for investors. You cannot live there, but if you qualify based on your income, then you don't want to go with non-QM options. You're only going through this when you don't qualify based on your tax returns. If you need any help, please get in touch.